Gold just bounced $50 off the weekly pivot. Weak NFP sent real yields into freefall, but the weekly trend is still an avalanche waiting to resume. 4,200 is the trap. Break above it. We get a melt up to 42.51. Reject it. We freefall to 39.89. I have 2 Monday scalps and 1 3 to 5 day swing that plays the entire move. Gold just opened the week with a 1.25% surge, a $50 rocket off the weekly pivot, but I need you to look at the bigger picture. The weekly trend is a strong sell. The daily structure is broken. Every rally for 2 weeks has been sold into, and now we are standing right at the line that will trap one side of this market for the next 5 days. 4,200. That is the number. This week has one danger zone and 1 3 to 5 day opportunity. I'll show you both right now. Stay to the end. I'm giving you 2 Monday scalps and 1 swing trade designed to run for the next 3 to 5 sessions. Do not take a single trade this week until you see the liquidity pools I'm about to map out. Here is my 3 to 5 day structural bias. We fade the rip. The weekly chart is an avalanche, a strong sell trend with a MACD that is still printing negative histogram bars deep below the zero line. The bounce you're seeing is a short covering rally born out of a weak NFP on Friday that crushed the dollar and sent real yields tumbling. But the gravitational pull of the weekly trend is not broken. My bias is to sell into strength, specifically into the 4,200 resistance zone. The single invalidation level that flips me from bearish to bullish for the week is a daily close above 42.51. That is weekly R2 and the level where the weekly structure would start to shift. Write this number down right now, 40.89. That is the weekly pivot. If gold loses 4,089 this week, the whole monthly structure resets, and we are on a path to the 3,989 support and then 39.28. That is the trapdoor. Now, here's what the herd is doing coming into Monday. The commitment of traders data shows large specs were heavily short into the NFP print. The weak number forced some covering, but the bulk of that short position is still underwater and sitting just above 4,200. That means there is a massive pool of stop loss by orders resting above Friday's high and above are 1 at 41.89. If we poke above that zone, the short squeeze will be fast and violent. It's a textbook liquidity run. But if we fail to break it, those same shorts will reload with confidence. That's the trap. Let's walk the charts. Weekly time frame first. Price is trading at 41.75, well below the weekly 20-period moving average, which sits up at 44.46. The weekly 50 MA is even higher. The MACD on the weekly is negative 29 points, deeply entrenched in bearish momentum, but, and this is critical, the histogram bars are becoming less negative, hinting at a slowdown in downside velocity. That does not mean trend reversal. It means the week could see a pause or a counter-trend rally before the next leg lower. Support on the weekly is stacked. 39.89 is the first line in the sand, the level that held on the last flush 2 weeks ago. Below that, 39.28 and 38.28 are the structural supports from the 2025 accumulation range. Resistance is 41.89, then 42.51, then way up at 4,351, which aligns with the weekly 200 MA that is still sloping higher, but price broke below it months ago. So the weekly picture is a bear flag developing within a downtrend. Now drop to the daily chart. The daily trend is neutral. Why neutral? Because the ADX is elevated at 38, showing a strong trend, but the price is wedged between the 5-day and 50-day moving averages. The 5 MA is at 42.27, the 50 MA at 42.32. Gold hasn't even sniffed those levels since the breakdown 2 weeks ago. The 20-day MA is way up at 44.46, so the daily moving averages are in full bearish alignment, 5 below 20 below 50. The daily RSI is 40.89, not yet oversold, but it is carving something subtle. Look at the RSI over the last 2 weeks. Gold made a lower low near 40.50, but the RSI made a higher low. That is a hidden bullish divergence on the daily time frame. It does not flip the trend. It is a warning that downside momentum is tiring, and a bear market rally can erupt at any moment. That is the fuse. Now, drop to the 4-hour and 60-minute charts, because this is where the Monday scalps live. The 4H trend is a strong buy. The 4H MACD has crossed bullish, and price has reclaimed the 4H 20-period MA, which is now curving up around 41.45. The 60-minute chart is also a strong buy, with price holding above the 60M MA20 and MA60. The 1H RSI is at 62, still room to run. This intraday momentum is why I have a long scalp for the Monday session. However, these short-term buy signals are colliding with the daily neutral and weekly strong sell. That compression creates exactly the kind of volatility that can deliver a fake breakout above 41.89. Most traders see the 4H buy and go long blindly into resistance. The trap is set. Here's what most traders will miss until Wednesday. The weekly MACD histogram is forming what could be the early stages of a bullish convergence. If this week's candle closes back above 4,200, that histogram could turn positive, and the weekly sell signal will weaken. But that requires a close above 4,200 on Friday. Until then, the default is still sell rallies. I want you to hold that thought. Now, let's connect the news, the flows, and the calendar to the price path I'm laying out. Over the weekend, JPMorgan dropped a headline. They see gold hitting $4,500 in the fourth quarter, but they explicitly said the near-term risks are to the downside. That is a classic two-handed analyst call, but the market digested it as long-term bullish, but not yet. The real driver this morning is the aftermath of Friday's NFP. The number came in weak, below 100K, and that sent the US 10-year yield down 8 basis points on Friday, closing below 4.1%. Real yields fell to the lowest in 3 weeks. That is oxygen for gold. The dollar index is testing a key support at 104.50 right now. If the dollar cracks lower into the European session, gold will push towards 41.89 and 4,200 with conviction. So the early week path is clear. The dollar and yield pullback give gold a window to rally. But the weekly calendar has a midweek wildcard. Wednesday we get ISM services data, and more importantly, a batch of Fed speak from 3 voting members. If they push back against the rate cut narrative that NFP ignited, yields will pop, the dollar will bounce, and gold will reverse hard. That is the most likely turn point. Thursday is quiet, but Friday brings the University of Michigan sentiment and inflation expectations. A hot inflation expectation number could slam the brakes on this gold bounce. So the narrative web for the next 5 days is early week recovery on NFP afterglow, midweek test of 4,200, then a potential failure as hawkish Fed talk reasserts the strong dollar. My 1 to 2 week directional lean is lower, but only after this bounce exhausts. The exact event that invalidates this view is a daily close above 42.51, or a collapse in the dollar below 104. If we close above 42.51, the weekly bearish structure is compromised, and I will flip to a buy-the-dip stance for a run towards 43.51. Do you think gold closes above 4,200 this Friday? Comment yes or no right now. I'm tracking consensus for the week. Before I give you the setups, hear this. Most people skip the planning phase. They react to the Monday open and get chopped up. The money this week is made right here, mapping the traps. Keep watching because these 3 setups are engineered for exactly the liquidity environment I just described. First, the Monday scalps for the session, then the swing for the 3 to 5 day core move strategy 1. The Monday opening scalp, scalping, high probability. The 4H and 1H charts are in a strong buy cycle, and Monday's session is riding the momentum of Friday's yield drop. The highest probability long comes on the first shallow pullback into the Asian liquidity zone. That zone sits at 41.65, which is the Friday New York session high that was briefly broken post-NFP and now flips to support. If price retests 4,165 and prints a 5-minute bullish engulfing candle, I'm long. Stop loss goes at 41.58, just below the cluster of the 1HMA60 and today's open tick. Take profit 1 is 4,185. A quick $20 scalp into the pre-R1 congestion. Take profit 2 is 4,195, just ahead of the 4,200 psychological barrier, offering a risk-to-reward of 1 to 2.5. This setup is voided if any 5-minute candle closes below 4,160 before entry. That signals the 1H by structure is weakening the Monday opening SCLP entry, 4165, 5M bullish engulfing reclaim of Friday's high, stop loss, 4158 take profit 1, 4185 take profit 2, 4195 risk, reward, 1:2.5 R invalidation, void if 5M candle closes below 4160 strategy 2, the Monday liquidity grab, scalping, counter noise, now the trap setup. Friday's session high was 4179. The weekly R1 is 4189. Just above that sits the psychological 4200 level. That is a magnet for stop hunters. The liquidity pool from trap shorts is thick between 4189 and 4205. The play is a fake breakout. If price spikes above 4189, run stops, and then within the next 5 minutes collapses back below 4185, that's your entry for a fast short. My trigger: a 5-minute candle that wicks above 4190 but closes below 4185. Enter short at market on that candle close, with a stop at 4196, just above the expected wick high. Target take profit 1 at 4170, the area of today's open. TP2 at 4162, right near the first scalps entry zone. This is a 1 to 2.5 risk-reward snipe. This requires aggressive execution. If the candle close is decisive above 4192, the breakout is real and the setup is void. Do not fade strength, only fade the failed breakout, the Monday liquidity GRAB entry, short after 5 minutes candle spikes above 4189 and closes below 4185 stop loss, 4196 take profit 1, 4170 take profit 2, 4162 risk, reward, 1:2.5 R invalidation, void if 5M close above 4192. Here's the cliff. Are you scalping Monday or swinging the week? Comment the words scalp or swing right now. Let's see who's built for this kind of tape, because the swing is where the real money is made. Strategy 3, the 3 to 5 day swing, trend alignment. This is the anchor trade for the entire week, aligned with the weekly strong sell trend. I am fading the rally into the resistance cluster between 4195 and 4205. This zone is where the daily 5 and 50 MAs converge, where the weekly bearish momentum reasserts, and where the short squeeze runs out of steam if the macro doesn't confirm. The trigger: a 4H bearish rejection candle, preferably a shooting star or bearish engulfing, that closes back below 4195 after testing the 4200 area. Entry at 4198, stop loss at 4251, which is weekly at 2 and the structural invalidation of the bearish bias. The risk is $53. Target 1 is the weekly pivot at 4089. That's a $109 move, a 1 to 2 risk-reward midweek. Target 2 is the major support at 3989, offering a 1 to 3.9 risk-reward by Friday. Once price reaches halfway to 4089, around 4144, I move the stop to break even. I will hold this swing for 3 to 5 days unless we hit the trailing stop or the invalidation. The weekly outlook is dead if gold closes a daily candle above 4251. That would cancel the swing and force a reassessment to 3 to 5 days. The NG entry, 4198, for H bearish rejection close below 4195, stop loss, 4251 take profit 1, 4089 take profit 2, 3989 risk, reward, 1:3.9 R invalidation, void if daily close above 4251. Risk management is the only edge that survives the week. Never risk more than 1 to 2% per trade. On the swing, because we are fading a short term by cycle, size smaller than your scalp, the countertrend exposure requires it. Stops are non-negotiable, especially with Wednesday's Fed speak looming. If you're holding through a high-impact event, tighten up. This is how you survive to trade the next big weekly move. So here is the week in one level, 4,200. That is the line that rules everything. If gold closes Friday above 4,200, the monthly downtrend is in serious trouble and the Q4 $4,500 call gets pulled forward. If it rejects 4,200 and we take out 40.89, the freefall to 39.89 is the path. I'll be watching Fridays close like a hawk. This Sunday, I'll have the updated blueprint, whatever the outcome. If you want to see how we navigated the NFP flush that set up this entire bounce, that video is live right now. Tap the end screen to watch the gold recap. Then hit the bell so Sunday's week ahead alert lands before the Sunday open. That is how you stay ahead of every institutional flow. Hold the like button and subscribe. Every signal tells the algorithm to bring you the levels that define your week. This week is ruled by 4,200.